Hi guys, good evening to you all. Can you guys hear me? Awesome. Let's wait for 2 more minutes because I can see only 5 has joined so far. There are a few more numbers. So let's wait 2 more minutes for the others to join. Then we will start from where we left on the previous session. All right, so we will start. So if I'm not mistaken, we did up to this particular slide in the last class, right? Am I correct? This is where we stopped, right? We were having a revision or revising our knowledge about individual income tax, and we did up to motor cars, how to deal with if an employer provides with a motor car. Great. So if an employer gives a motor car, that will be considered as a taxable benefit at the hands of the employee. True. But the problem is again similar to the living accommodation benefit. We do have a concern. How will we assess the value of the benefit? That is a question mark. Because we cannot take straight away, we cannot take the market value of the car. We don't have the ownership of the car. The car will be owned by the employer. Employee will not get the ownership. Employee will only get the right to use the car. So there should be some mechanism that we can use to assess the benefit of use. So for that, we use a small formula like this. We take the list price into something called appropriate rate, and then we deduct any contributions made by the employee for the use of the car. Can anyone recall what do we mean by this list price? Anyone? Okay. So basically, list price means the original price published by the manufacturer prior to the registration. This is not the cost at which the employer has purchased the car. This is the price at which the manufacturer has published. So now let's say the value of the car price is, let's say, around 80,000 pounds. But the employer has purchased 3 cars at a stretch and they have been given with a 10% discount. So employer has actually spent 72,000 pounds on the car, on one car. So what would be the list price that we need to take? 72,000 or 80,000? What are your thoughts? What should be the value that we take? I got one answer, the others? Come on, guys, share your thoughts. No problem in getting a wrong answer. Nothing to worry about. Just share the answer that you feel correct. Is it 72,000 or 80,000? The answer I got is 80,000. Okay, yes, I agree. Because the price at which the manufacturer has published is going to be the value for us. Good. Next one. If there are any extra parts that we have requested to add, the employer or employee has requested to add, the value of those parts will also need to be added to the list price. For an example, in the example or the illustration that I took, they wanted to modify some parts. As a result, they have asked certain modifications or certain new features to be incorporated to the car, which has cost 2,000 more. Now, what would be the list price? What do you guys think? Now, what should be the list price? Come on, guys, everyone try to give an answer. What should be the list price now? There was a modification of 2,000 at the request of the employer. Great. Still, I'm getting only one answer, 82,000. The others, any thoughts? Great. I got two answers. It's a good improvement. One extra answer. Yes, I agree. It should be 82,000 then. Next point would be, now what if employee also contributes some amount towards the cost? Let's say I am the employee and I also placed around 8,000 pounds towards the cost. Then what should be the list price? Okay, I got one answer as 92,000, one answer at, sorry, 90,000 and one answer as 82,000. The others, what are your thoughts? So I can see there are 3 more people in the class. Can you guys share your views as well? 90,000. Okay. Why do you think, why are you guys increasing the list price? I contributed 8,000. Being the employee, I contributed 8,000 towards the cost. then why should the list price go up? I have paid something out of my pocket now. List price increases means the taxable car benefit goes up. So after I contribute 8,000 out of my pocket, why would my taxable benefit should go up? It should come down, don't you think? Because I already spent some cash on that. What's your view? I would say if the employee, contributes any amount towards the cost, that should reduce the list price, right? Not increase. Because the actual benefit I receive from my employer is going down. Because partially I am contributing towards that. So technically, the list price that we consider for tax purpose should come down. Don't you think? Do you guys agree with that comment or not?
Yes, sir.
Great. But unfortunately, there is a limit for that. The maximum amount would be limited to £5,000, irrespective of how much is the actual contribution made by an employee towards the cost. The deduction of list price will be limited to 5,000. So in my example, even though I contributed 8,000, the deduction or reduction in list price will be limited to 5,000. So 82,000 minus 5,000 would be 78,000. Are we clear? Is that clear for everyone? Awesome. So when it comes to my view, the employee's view, there can be two kinds of payments that I might make to my employer with regard to a car. Number one, my contribution towards the purchase cost that we adjusted to the list price. Apart from that, sometimes I might have to pay a certain amount for the usage as well, isn't it? Maybe 100 pounds per month. Maybe. If that is the case, what should we do for that 100 pounds per month? So now list price is sorted out. I have been given the car to my use. And I have been asked to pay 100 pounds per month for the use of the car. Now, not for the cost. For the use also, I am paying 100 pounds per month. What should we do for that 100 pounds per month? Take it as employee contribution. So adjust it to the list price again, is it? Deduct from the car benefit, okay? Muaz, I just need a small clarification about your answer. Okay, great. So deduct it from the list price, okay? Deduct from the car benefit, all right? Any different views, guys? So I would go ahead with Megan's answer. We have to adjust it for the car benefit, not to the list price, because list price is the capital portion. What I am paying £100 per month is not a capital contribution. It's not towards the cost of the car. It is just something similar to a rent that I am paying to use the car. So I can deduct that against my car benefit, not against the list price. So are we clear about the two different contributions that the employee might do towards the car? Are we clear on the two different aspects? Great. So be careful about this one because as per your examiner's comments, as well as from my experience, what I have observed is this is an area where students usually get, carried away. Usually students misinterpret this area. So whatever the contribution employee makes towards the cost of the car will be adjusted to the list price. Whatever the contribution the employee makes for the use of car will be adjusted towards the car benefit. Make sure this one is clear for us. Are we good? Anyone who's having a doubt around this area? Great. Then the next question is, how are we going to calculate the appropriate percentage for cars? So there are two different tables that are available for us. One table for petrol and diesel cars, another table for hybrid cars. So for petrol and diesel cars, it depends on two factors. Actually, three. Whether it is petrol or diesel, whether it complies with the RDE2 standards and the CO2 emission. Based on these three factors, the appropriate percentage will differ. We'll start from petrol. A petrol car and a diesel car which meets RDE2 standards has the same provisions. If the CO2 emission is within 51 grams per kilometer to 54 grams per kilometer, the appropriate rate would be 15%. If the CO2 emission is 55 grams per kilometer, the rate would be at 16%. This is for petrol cars and diesel cars with which meets the standard. For diesel cars which does not meet the standard, nothing to worry, just add 4% to this one. So 15% will become 19%, 16% will become 20%. CO2 emission means the carbon dioxide emission. How much of a carbon dioxide will be released from the car for the environment when we are using it. So the CO2 emission percentage will be given in the exam question if they are testing this one. So what is CO2 emission? That is the carbon dioxide release that the car will do when it is in use. Great. So this is up to 55 grams per kilometer. But if it is above that, for each 5 grams per kilometer slot, additional 1% will be added to the appropriate rate. So if it is 60 grams per kilometer, 16% will become 17%, 20% will become 21%. Are we clear on that point as well? Up to now, the rates are clear or any doubts are there? Okay, Muaz is clear. How about the others? Great. The other thing is the maximum appropriate rate would be restricted to 37%. If it goes beyond that, apply the maximum rate of 37%. Do not go beyond that. Are we good? The maximum should be 37%. Do not go beyond that. Are we okay? Great. And for electric cars with zero CO2 emission, the appropriate rate would be only 2%. Earlier, it was 0%, but last year they have changed it to 2%. And for hybrid cars, there would be a table which will be given to you in the exam. So nothing to worry. Depending on the electric mileage, But keep in mind for hybrid cars, it is not the CO2 emission. It is based on the electric mileage, how far you can go from the electric mileage. So based on the electric mileage, there would be a percentage which will be given to you in the exam. Are we clear? Great. But this electric mileage or this hybrid car has not been tested in the exam in the recent past. So like I always say, you guys might be the lucky batch where they test it. Not all. For petrol and diesel, this petrol car part will be given in the exam. The rest we have to calculate. So if it is diesel, meet the standards, exactly equal to petrol. If it is diesel which does not meet the standard, add 4%. Only the petrol one will be given in the exam for petrol and diesel cars. For hybrid, they will give you the table. Arundhati, are you okay?
Yes, sir. Okay, sir. Thank you so much.
No problem. RDE2 means it's an environmental standard. So unlikely in our countries, like if you have gone through our handouts, the first handout itself says UK is really worried about the environmental pollution. So depending on your environmental footprint, there can be some additional charges coming in. So this is one of those scenarios. If you do not meet with the environmental standards for your car, you will have to bear an additional burden. So that's why the rate is higher for the cars which does not meet the environmental standard. Are we good? Awesome. Next one is private use of assets. What if an employer provides assets to the personal usage of an employee? For an example, what if he provides furniture to be used in a house? So it's a revision. I'm expecting an answer from you all. What would be the tax treatment in that kind of a scenario? The employer has given furniture to be used in the house. Okay, I got one answer. The others, what are your views? Good. I got Megan's answer. The others, can you also join the discussion, please? All right. I agree with Megan's answer. If something like that happens, if an employer provides any assets to private usage of an employee, we have to figure out the market value at the time of the provision, and 20% of that we have to consider as a taxable benefit for each tax year. Find the market value, take 20% of that as a taxable benefit. Are we good? Guys, are we okay?
Sir.
Great. Now, the scenario slightly change. Sometimes employer also might take these assets for rental, isn't it? If that is the case, you have to compare the rent paid by the employer and 20% of the market value of the asset and take whichever is higher as the taxable benefit. This is only if employer has taken these assets on a rental basis. We compare the employer's rent against the 20% of the market value of the asset, and we take whichever higher as the taxable benefit. Are we good? Awesome. The next scenario is, what if an employer gift an asset to the employee? So I'm the employer. Assume I recruited you guys to ODOC, the company that I work for. I recruited you guys for ODOC. And I gift you a set of furniture or a home theater system. Assume I won't, but assume I did. If that is the case, what would be the tax impact? As your employer, I gifted a home theater system to you. What would be the tax impact of that? So do we get the market value and figure out 20% of that and make it taxable? Market value of the asset at the time of the gift less the previous private use of the asset benefit. Okay, Megan, good answer. The others, what are your thoughts? What should we do? Higher of that. Okay, all right. Guys, again, as I always say, be careful about the requirement. What was the question I asked? Did I mention anything about previous private usage? I only ask what would be the tax implication if a gift is provided, an asset is gifted by the employer to the employee. Then the treatment would be take the market value at the time of the gift and make it taxable. The private usage, this higher or the lower story, comes into the picture if there was a private usage previously. But the question does not specify any kind of that kind of a requirement, right? Did I mention anything about private usage? No. I only ask, what if an employer gift an asset to an employee? Simply what we have to do is figure out the market value at the time of making the gift and take it as a taxable value. Are we clear? Guys, are we good with that? Great. 20% comes into the picture only if asset is not gifted, but only the right to use the asset is given, because then we cannot tax the full market value since the employee does not get the ownership of the asset. But if the employer gives the asset to the employee, then we can tax the full market value because now the employee receives the ownership of the asset. Arundhati, are we okay?
Yes, sir. Okay, sir.
Arundhati, did I address to your question?
Yes.
Great. So I got a request from Muaz. I'm just repeating once more. My question was, what will happen if an employer gift an asset to an employee? I am not mentioning about any kind of a private usage previously. So if the scenario is only about gifting an asset by the employer to the employee, simply take the market value and tax the market value. Muaz, are we good? Awesome. Now I will come to the point that you guys were explaining in the previous question. What if an asset which is already in the private usage of an employee What if now employer gives that? For an example, 2 years ago, when I joined the company, employer has given me a home theater system for my use. But now after 2 years, I'm retiring. Then employer decides to give that to me. So the same asset that which I was using for my private use earlier, now he is gifting that to me. Then yes, the point you guys explained earlier comes into the picture. Then we have to take the higher of the market value of the asset at the time of the gift, or the market value of the asset when it was first made available for the employee minus all the amounts already taxed at the hand of the employee. That means whatever we considered for private usage, deduct that amount. Compare these two and take the higher as the taxable benefit. We take the market value at the time of the gift. Then we take the remaining value of the private usage, which we haven't taxed. Compare those two, take the higher one as the taxable benefit. Are we good? Any questions from anyone? All right. Then I'm moving into one of your favorite topics, trading income. I'm not going to spend a lot of time on the theories around trading income, but we will look into few questions later on. So what is trading first of all? What is meant by trading? As I always say, always we should know why and what. So what is meant by trading income? What do we mean by trading income? Great. Basically, any income received from a business is considered as the trading income. So are we talking about the profit or are we talking about the revenue here? So if you take your P&L, there would be two, right? There would be profit and there would be revenue. Are we talking about the profit or the revenue?
Revenue.
Sorry, Arundhati?
Revenue, sir.
Revenue, okay. I got two other answers as profit. Okay, great. So guys, when it comes to trading income, we are talking about the profit, not the revenue. The reason is, if you take your employment income, the whole portion you receive from your employer is a pure income for you, right? Because we are not spending anything for our employment. But for trading, to earn this income, I have to incur my cost of sales. I have to pay to my staff. I have to spend my marketing cost. Without incurring those costs, I cannot earn my revenue. So I cannot consider my entire revenue for tax purpose, but I have to allow for these expenses. So I have to go for the net basis. In accounting, my net one is known as the profit. So we go for the profit when it comes to trading income. Is the reason why we go for the profit instead of revenue clear?
Sorry, clear now.
Great. But can we straight away take our accounting profit and pay taxes on that? Can we do that? I got one answer as no. The others, what are your thoughts? Can I just take my accounting profit and apply my tax percentage on that? Okay. I'm getting few answers as no. And Megan gave a reason as well. The others, why do you believe we cannot simply take our accounting profit and charge tax on that? Any particular reason why you say no? There are some non-allowable expenses, okay? Interest should pay, okay? Basically, the reason is certain income and expenses, the treatment for taxation is different from the treatment for accounting. For an example, depreciation. In accounting, we deduct depreciation. But in taxation, we do not allow depreciation to be deducted. There is a reason for that. When we go to the chapter called capital allowances, hopefully today, I will explain that why we cannot take depreciation into account. Likewise, there are differences between our accounting adjustments and our taxation adjustments. That is why we cannot straight away take the accounting profit and apply the taxes on that. Are we clear with that as well? Great. So that means, do I need to calculate my tax profit separately, starting from revenue, deduct my cost of sales and apply the other expenses, consider the other income? Do I need to recalculate from the beginning? What is your view? Great. We don't have to do that. Actually, in taxation, there are two methods of calculating the tax adjusted accounting profit. One is known as the direct method. The other one is known as the indirect method. In direct method, we calculate everything from the scratch. We start from the revenue itself and do the whole computation once more. That is the direct method. But the most famous method is the indirect method because it requires less time and effort. Indirect method is where we start from the accounting profit and do a backward calculation by doing the adjustments to bring the accounting profit to the tax adjusted trading profit. Okay, I have two questions. Let me go through one by one. So guys, this session is purely for the revision purpose. Just to help you guys to revise everything that you would have studied by now. The theory sessions, that means the theory classes and the Premier Plus product, the objective is to give in and out theoretical knowledge. So this class objective is just to have a briefing, a revision about what we have studied up to now. So if the theoretical knowledge is required, if theoretical help is required, always Premier Plus is there to help you guys out. And if my memory is correct, it has been issued at a very discounted price, if I'm not mistaken. Now it's only around 3,000 for your batch. Yes, it's only at 3K for y'all. Technically, it was supposed to be 30. So we had a small chat and decided to go ahead with 3 for y'all. Yeah, I thought so. So, yes, because we really need a good result from this batch. Thank you. I'm really glad to hear that. So, I personally want a really good result from your batch. So that's why we had a chat and decided to issue that. Because going forward, mostly I will be, January batch, I'll be involving in certain areas of the theories. But apart from that, mainly I will be into the Premier Plus only for the local scenario. Yep, we have a separate team actually for this video editing and all those stuff. So, yep, they have given a really, really good effort. I personally appreciate them because given one recording, around 8 hours recording, I missed to record the screen. So, based on my lip syncing, they had to do the edit for 8 hours. And that entire thing they did without complaining me. So, I really appreciate our team, the staff. They went through a lot of difficulties to complete this product, but finally we did that. Thanks, guys. I'll let them also know that you guys appreciated the product. It was mainly their effort. I also participated here and there with the lecturing, but yes, they gave a huge effort. Oh, yes, I would say if you are going ahead with that now, then you can go ahead even with the Premier Plus itself because that includes past paper discussions, theory discussions, mock discussions, and everything. And once they issue the new pre-mock, probably in 15th or 16th, as soon as they issue that, I will be doing a explanation on that, and that will also be added to your Premier Plus one as well. Having said that, the advantage of this class is the next few classes. Today would be the last revision class we are having on theories. The next few classes will be purely on questions. Different kinds of questions. Some of them are models, which I made. These are not extractions from Kaplan, most of these questions. So most of these will be my ones or past papers. What's the date today? I studied. Okay. So if the pre-mock is out, Thursday, I have a recording. So I'll be looking into that Thursday. So probably by next week, you guys will get the access for that. Great. So that's the intro about these stuff. Anyway, I'll do a separate video on the different products that we are showing. I know some of you all are confused. Different products are releasing in different times of the year. So I had a chat with Zian, so he's okay. So as soon as possible, I'll issue a separate video on what kind of products we offer and for what kind of purposes that we can use different products that we are having in our batch. Right. Coming back, we were discussing about the indirect method of how to do this tax adjusted trading profit story. In indirect profit, we start from the accounting profit and do a backward calculation by adjusting of four main adjustments. Number one, expenses that are not deductible for tax purpose, but deducted for accounting. Example, depreciation. We do not allow to be deducted for tax purpose, but in accounting, we have deducted that. So what we should do for that then? To convert accounting profit for the tax adjusted trading profit, what should we do for these kind of expenses then? Okay, I got one answer as add it back. The others, what are your thoughts? Okay, I agree with Moaz. We need to add it back. Great. Second category, there can be certain expenses that are deductible for tax purpose, but not deductible in accounting. For an example, gratuity payment. In accounting, we do not deduct the payment. We only deduct the provision. But in taxation, we do allow the actual payment to be deducted instead of the provision. So for that kind of expenses, what should we do? Awesome. We can deduct it. Great. On the other hand, there can be certain income that are taxable but not included in the accounting profit. What should we do for that? For an example, recovery of written off bad debt. In accounting, that will be automatically adjusted in the bad debt provision or the impairment provision. But for tax purpose, we separately allow that to be deducted. Yes, we need to add it to the accounting profit. Good. Lastly, income that are included in accounting profit but not taxable. For an example, interest, dividend, and rent income. For accounting purpose, these are included in your profit. But are they trading related profits? No, right? So we have to take them out of the trading profit. So what we should do then? Awesome. We should deduct them. So we need to do these 4 adjustments in order to convert my accounting profit into tax adjusted trading profit. Are we clear? Awesome. Then let's have a quick discussion about what kind of main adjustments might be there in your exam. But this is not a extensive list. These are just main adjustments. But time to time, when we are discussing questions, we will discuss about some other additional stuff also that might come in the exam. Number 1, appropriations to the owner. So what do we mean by appropriations to the owner? First of all, what is meant by appropriations to the owner? Okay, I got 2 answers as drawings. The others, what are your thoughts? Share of profit, okay. Capital on interest, all right. Okay, good. So appropriations means whatever payment that we have made to our owner, any kind of a payment, even salary. The owner cannot have a salary in individual taxes. Whatever payment we have done to the owner, we need to reverse it. We have to add it back. Are we good? The appropriations, are we okay? Yes, drawings are also a type, but that will not be deducted from your net profit. Usually it is adjusted after the net profit. So will not have an impact if you have done your accounting correctly. But by any chance, if you have adjusted that to your net profit, profit before tax, that means, then yes, you need to adjust it back as well. Muaz, are we good? Great. Right. So since this question came in, I will explain one more thing. Guys, there is no hard and fast rule which profit should be the starting point for your adjustments. It could be your gross profit, operating profit, or profit before taxes. Could be any profit. In the exam, 99% of the time, examiner will mention from which profit figure you have to start your calculation. Then based on from where you start, the adjustments might vary. For an example, if you start from operating profit, do you need to adjust for depreciation? Do you need to add back the depreciation? Great. In that case, we do not need to adjust depreciation because at the operating profit level, depreciation is not deducted. It is deducted after the operating profit. Therefore, do not try to memorize these adjustments. Try to grasp the concept why we do the adjustment. Then we can adjust based on the requirement of your examiner. Sometimes they ask to start from the operating profit. Sometimes they ask us to start from the profit before tax. So depending on the requirement, we need to make sure we do the proper adjustment. Are we good? Awesome. Next one is salaries paid to family members. First of all, is a sole proprietor an individual trader? Are they allowed to pay salaries to family members? That is my first question for y'all. Will a sole trader be allowed to make a salary to their family members? Great. We cannot have a law saying that you cannot pay salaries to your families. Great. Like Moaz has said, they can pay, but depending on the situation, how we deal that for taxes might differ. So you can make a payment, no problem. But whatever we allow as a deduction for tax purpose would be limited to the amount that you would have paid for a third party. The market rate for the work performed would be the maximum amount that we can allow to be deducted. For an example, X and Y are spouses. X is the owner of the business. He recruits Y as the accountant of the business. The market salary of an accountant is 40,000 and we are paying 45,000. What should we do now? Y is the spouse of X. X recruited her as the accountant of the business. Market salary for an accountant is 40,000 and X is paying Y 45,000 as a salary. What should we do? Add back 5,000. Okay, I got one answer as add back 5,000. The others? Megan, are we clear on the question now? Great. Yes, I agree with your comment. Already 45,000 is deducted from your accounting profit. So add back 5,000. Good. Now let's say Y is a housewife and X is paying a salary of 35,000. Then what? What should we do? I'm repeating the question. Y is a housewife, but still X pays a salary of 35,000 pounds for Y. Okay, I got one answer as add back the entire amount. Great. I agree. The full amount needs to be added back because now Y does not provide any kind of a service, right? If she's not doing any service, why should we pay a salary for her? That is not allowed to be deducted for tax purpose. He can pay, but not allowed to be deducted for tax purpose. So the entire amount we need to add back. Are we good? Awesome. Then interest payable. What about the interest? So when it comes to trading, there can be two kinds of interest. One trade related interest, one non-trade related interest. If it is a trade related interest, nothing to worry. We will allow full amount to be deducted. But if it is a non-trade related interest, we cannot allow that to be deducted. We will have to add it back if that is already deducted from your accounting profit. Are we good? Great. Next one, car rental and leasing. So can anyone recall what you guys learned about car rental and leasing? What did you guys learn about car rental and leasing under trading income? Anyone? No one can recall. Leasing below 50 grams per kilometer is allowable. Okay, all right. I got one answer. The others? 2 minutes. Go back to the handout and try to figure out. You guys might be referring some kind of a handout, no? It could be our ones, it could be Kaplan, it could be BPP, could be Study Hub, whatever. 2 minutes, go back and find out. Let's make this a little bit interactive. Above that, 15% is disallowed, all right? Okay, I got one answer from Nafiz, good. The others. Quickly go back to your handout. Whatever the material you refer, try to find out the answer. Max 2 minutes. I'm assuming you guys are searching. Okay, I got the same answer from Megan. Great, I got two answers. The others, what are your thoughts? Meantime, may I please know who has logged in as Dell?
Yes, hi sir. I'm Abdullah. Very
Hi,
yeah,
Abdullah.
your student.
Yep, good afternoon. So,
Good evening, sir.
good
So
evening.
car rental is like if CO2 carbon dioxide emission is less than 50 grams per kilometer, then fully allowable. If it is above 50, then it's 15%.
Great.
Is it?
Super. Awesome. Yes, I
I'll
agree with
rename
your
mine.
answers.
Yeah.
You have paid for the exam this time, right?
Yeah, yes, sir. Yes, sir. This time I must do actually.
Sure.
Yeah. No, I've already done. Yeah.
Right. So you have paid, right?
Yeah, all done.
Awesome. I'll get in touch with you tomorrow.
Yes, I'll drop you a text, sir.
Super. So guys, yes, I agree with your comments. It depends on the CO2 emission. If the CO2 emission is 50 or less, no problem. If it is 50 or more, 15% will be disallowed. So what do we need to do then if it is more than 50? Just add back 15% of the deduction. Are we good? Awesome. Next one, gifts given to the customers. So what do we do for gift given to the customers for trading purpose? Again, these should be in our fingertips. If you cannot recall, go back to the handout. When you search on your own, it will be in your head. So whatever I feel testable are the ones I'm asking you to go back to the handout. Huh? Should be less than 50 pounds. Okay, all right.
50 pounds per person per year.
Yes, good.
And
Should
then those
have.
cannot be like food items or drinks kind of things.
Good. Should have advertising component. Great, good. So I can see that some of y'all can recall or referring to the handout. Either way, it's good. So yes, all 3 points you guys have said is correct. It will be maximum 50 pounds per person per year. You can't go beyond 50 pounds. It should carry an advertising component. At least your logo should be there. Finally, it cannot be things like this food, beverages, alcohol and all. Apart from that, the gifts are deductible, but these gifts are not deductible, so we need to add back. Are we okay? Awesome. Legal and professional charges. What do we discussed about that? Guys, this legal and professional charges is something that we do not take that seriously. But there was an instance, this was tested for 6 marks. So don't underestimate any part of your syllabus. Residency was tested for 4 marks once. Tax administration, last time we had a 10-mark question in section C. So you can't underestimate any part of your syllabus. Anything can be testable in your exam. So that is the biggest disadvantage you have in papers like tax and PM. The other papers we can guess. Here we can guess, but PM is very tough to guess. But tax you can guess, but it is a very, very high gamble to take, which I'm not willing to take. So we have to be thorough about all the small areas of the syllabus as well. So legal and professional charges. What does the, what do you call, Finance Act says about that? Not exactly. Some papers when I was lecturing, I guessed, and it was good. Not bad at all. In ACCA, yes, it's tough, but some papers we can. In local exams, definitely I can. Yes, to a certain extent, but depending on the paper, the risk of predicting will differ. Allowable. All the legal and professional charges, is it? We had 3 special things to be considered under legal and professional charges. Can someone recall?
Mm, legal charges relating to the trade, but not asset purchase or capital kind of thing. Those cannot
Okay.
be included.
Superb. That
Cannot
is
be.
one. There were 2 others.
Mm.
AA, you can predict 100%, but still your answer will differ from the marking scheme.
That's unpredictable subject.
Exactly. That's the most toughest subject, I would say. Yes, expenses in renewing short-term lease, good. There was one more. Don't worry, Muas. When we were doing ACC, it was even tougher. We didn't have online. We didn't have the luxury of having recordings. It's all about the book. And my handwriting is so worse, even I cannot read that. So it was a hard life for me anyway. I was reading some stuff that I cannot even read. Yes, Nafi, super. Registering patents. These are the 3 things that we have to know about when it comes to legal and professional charges. Usually, if it is relating to the trade, deductible, but 3 special circumstances. Number 1, like Abdullah said, whatever legal expense that we spend for capital assets are not allowed. Number 2, like Megan said, renewal of short-term leases. Number 3, like Nafis said, whatever legal expense incurred for registering a patent is allowed. These are the three factors that we have to keep in our head when it comes to legal and professional charges. Are we good, or do we have any doubts? Super. Then impairment losses and allowable trade receivables. So what do we learn about that? It's a frequent question, guys. Most of the times, if they test a full question without having something to think, if it is just about adjustments, rare situation. If it happens by any chance, this would be a certain adjustment.
Writing off any bad debts is allowable. Same thing, if you recover also, that is also taxable.
Great. So impairment and write-off of bad debts are allowable as far as it is related to the trade receivables, not all. If it is relating to trade receivables, allowed. And then, like Abdullah said, whatever we have write-off, if we recover that in a later point, that will be taxable as well. Are we okay? Right. Okay. Let me repeat. So when it comes to bad debts, there can be different types of bad debts, right? It could be from trade receivables. It could be advances. It could be on prepayments. It could be on anything. So if the impairment or the write-off of bad debts relating to trade receivables, then it is allowed to be deducted. If not, we cannot allow. For an example, staff loan. If I write off a staff loan, I cannot deduct that for the tax purpose because it's not relating to my trade. On the other hand, if I recover any write-off of trade receivables in a later date, that will be taxable. Muaz, are we okay? Great. Next one, goods taken for own use. That means the owner has taken the goods. What will happen? What should we do? Yes, we need to add it back. We have to consider that as a sale. Correct. Depends on how it has been accounted for. We have to assume it as a sale. So if we have recorded it as a sale already in our accounting, no adjustment. If we have recorded it as a drawing, only the cost is deducted, then we have to add back the margin. If we haven't recorded it at all, we have to record it as a sale. The full amount needs to be added back. Are we good? So there can be three treatments depending on how we have passed our accounting entries. Are we okay? Awesome. Then relief for pre-trading expenditure. First of all, what is meant by this pre-trading expenditure? What is meant by pre-trading expenses? Great. We are referring to expenses that we have incurred prior to commencing the trade. But can there be expenses that we are incurring prior to starting the trade? Why should we spend without having a trade? Exactly. We have to spend to set it up. For an example, we discussed about a product called Premier Plus a little while ago, right? So before we trade it, we had to record it. So to record, we have to have infrastructure. Like we required green screen, we required an editing team, then we required a videographer, then my cost was there. So all these costs were incurred prior to selling the product, prior to start the trading. So can we allow these expenses to be deducted for tax purpose? That is the question. That is the next question actually. Can we allow these kind of expenses to be deducted for tax purpose? I got one answer as yes, we can. The others? Up to 7 years can. Okay, good. Any different views? Great. I agree with Nafis. Pre-trading expenses are allowed up to 5 years. Beyond that, so up to 7 years, sorry. Beyond that, it's not allowed. Only up to 7 years pre-trading expenses we are allowed to be deducted. Are we good? Any questions around that? Guys, are we okay on pre-trading expenditure? Any doubts? Awesome. Right. With that, revision around individual income tax comes to an end. Now we have to look into a question around individual income tax. But before that, have a small announcement. Guys, if you guys have whatever question, whatever area that you are not clear about taxes, always feel free to reach out to me. No problem at all. Some of y'all are just revision students. No problem in that. Just because you guys are revision guys, there is no mistreatment for y'all. Whatever the doubts you have, just reach out to me. I will there to help you guys out. So doesn't matter whether you are a Premier Plus One, whether you are a Theory Class 1, whether you are a Revision Class 1, no problem in that. As far as you're attending one of these, you guys are my students. So no problem in reaching out to me. Whatever the queries you have, just make sure you reach out to me. Are we good? Awesome. Then let me share the what do you call question with y'all in WhatsApp. First, let me find out your group. There are a lot of groups that they have added me to. Okay, this is the all. Right, I have shared the question in your WhatsApp group. And no, this is not the question. This is a lot. Can you guys take 10 minutes? No, first of all, take 5 minutes and go through the question. 5 minutes, just go through the question. Don't try yet, just read it. Only read the question. Take 5 minutes and only read the question. Then I'll come back to the adjustments. First of all, just take 5 minutes and read the question. Guys, if you finish off reading before that, just drop a message, then we can start. If not, take 5 minutes and go through the question. Just go through, don't try it. Okay, one of you all has completed going through the question. The others, if you guys are also done, just let me know, then we can start. All right, seems to be most of you all are done with reading, then we'll start. So when you get a section C kind of a question, best thing to start with the question is go through the requirements first. So I have around 5 requirements here. Calculate the employment income, calculate the trading income, property income, income tax liability, and a bit of an interesting part, the last one. So now we know what we need to do. So let's go through one by one. Ben is working at MIL Limited as an accountant. He is also conducting a small business of his own. Below information are available with regard to Ben. Number 1, employment. Ben has been employed with MIL Limited since 2021 and receives an annual salary of £70,000. MIL Limited has granted a house for Ben with furniture for his accommodation on April 2022. Okay. This house was acquired by MIL Limited in 2015 at a cost of £60,000, and they have done few renovations prior to handing over the house to Ben, spending £10,000. The market value of the house was £95,000 on April 2022, and it had an annual value of 3,400. The value of the furniture was 7,000. Further, on December 2022, MIL Limited provided him with a petrol car which had a CO2 emission of 53 grams per kilometer. MIL Limited has spent £45,000 to purchase this car, and they added some features, spending an additional cost of £8,000. Ben has also contributed £6,500 to purchase the car, and he also pays a monthly amount of £150 for usage of the same. Until they provide Ben with a car, MIL has granted a mileage allowance of 60 pennies per mile for Ben, and there was an official mileage of 9,000 miles. The company also provided Ben with a mobile phone that is at a cost of £270. All right. Now, can you take 5 more minutes and try to calculate the employment income for Ben? Not 5. 6 minutes. Can you give it a try? Take 6 minutes and try to calculate the employment income for Ben. Can you do that? Awesome. Give it a try and share the answer in the chat so I can have a go through about it. Your time starts now. 6 minutes. Give it a try. Guys, your time is up. How's the situ? Anyone who was able to complete? Okay, 2 minutes more. Fine. Maximum 2 more minutes, guys. Max. Great. I got one answer from Nafis. Super. All right, guys. That 2 minutes is also up. Anyone else who has completed? Ishma, Abdullah, Megan, Muaz, how about your situation? Any luck? Okay, Muaz is done. Ishma not completed. Abdullah, 1 more minute. Still working on it. Okay. All right, we'll start discussing, guys. It's not a very tough one. So let's see. Shall we start? Is that okay? All right. So he has been employed since 2021, but our tax year is 2022, 2023. So we don't have to bother about 2021 numbers. So his annual salary is 70,000 pounds. Great. Thanks, Abdullah. I got your answer. Annual salary is 70,000 pounds. What should we do for that? Is that a part of employment income?
We have to take it, yeah.
Super. We need to take it as a part of employment income. Good. They have provided a house also from April 2022 along with furniture. House was acquired in 2015. Cost is 60,000. Subsequent renovation prior to giving the house to Ben is 10,000. Market value 95,000. Annual value 3,400. So how are we going to calculate the living accommodation benefit? So living accommodation benefit has few parts. Two actually. Basic charge and expensive accommodation. So basic charge, how are we going to compute on this one? Great. It will be higher of the annual value or the rent paid. So we do not have a rent paid by the employer. So annual value would be equal to the basic charge, 3,400. Then expensive accommodation. How about the expensive accommodation on this particular house? Nafis believes market value. Muaz believes since after 6 years market value, because more than 7 years market value. Okay, good. The others, Abdullah, Megan, Ishma, how about you guys? 95 minus 75 into 2%. Okay. The others, what do you think? Market value. Okay. Abdullah? Megan is also in the same view. Guys, but my view is completely different. Remember when we were discussing last week also, I emphasize on one point really heavily when it comes to accommodation. What was that? Before you think about anything when it comes to expensive accommodation, check what? Whether the cost plus subsequent improvements less than or equal to 75, sorry, more than or equal to 75,000. If it is more than 75,000 only, there would be an expensive accommodation. If it is less than 75,000, expensive accommodation itself is out of the calculation, isn't it? Yes. Okay. Now you recall that, right? This could have been your exam question. It's not tough. Actually, you don't have to do any adjustment. Just have a line and give a zero value. You would have gained the full marks. But unfortunately, all of you forgot that, isn't it? So all of you all lost marks in this adjustment. This is why tax is tricky. With few words, with couple of numbers, the entire answer can change. So we have to be very mindful about our conceptual knowledge. Don't try to memorize the stuff. Try to understand the logic behind that. Are we good? Are we okay? Is the adjustment and the mistake we did clear? All right. So be careful about these kind of adjustments in your exam as well. Could have been your exam question. If so, you might have lost minimum 2 marks. Minimum. So be careful on these kind of adjustments in the exam. Right. Moving back. The value of the furniture was 7,000. So what are we going to do for this furniture? Okay, I got 2 answers. The others, what are your thoughts? Nafis and Muaz shared their answers. The others? Yes, I agree. We can take 20% of the market value. That means 7,000 into 20% can be considered as the taxable benefit about furniture. Good. Then the next one, they have provided a petrol car which had a CO2 emission of 53 grams per kilometer. And company has spent 45,000 to purchase the car. And they have added an additional cost of 8,000 and Ben has contributed 6,500 towards that. How much is the list price, first of all? How do we calculate the list price? Not how much. How do we calculate? 45,000 plus 8,000 minus 6,500 is Nafiz's answer. 45K is Muaz's answer. The others, what are your thoughts? 45,000 plus 8. Okay, good. The others? Ishma, Abdullah, Megan, how about you guys? Ishma, 53,000. 45 plus 8 plus, 45 plus 8 minus 5. Okay. 45 plus 8 minus contribution by Ben. So contribution by Ben means how much? 6,500. Okay. Guys, again, another trick. Few minutes ago, we discussed, yes, contribution by the employee can be deducted, but subject to a maximum of how much? 5,000 pounds. The max we can deduct would be limited to 5,000 pounds. So it would be 45,000 plus 8,000 minus 5,000. Yes. Are we okay now? Adjustment clear? List price is okay for everyone? Great. Appropriate rate. How much would be the appropriate rate? I got one answer as 15%. The others, what are your views? Only 15%. Yes, great. So it will be 15%. Good. Then how do you calculate the overall vehicle benefit or the car benefit? Now we know the list price, we know the appropriate rate. How are we going to calculate the taxable car benefit? Not the final answer. Show me how you calculate the final answer. Guys, everyone. How will we calculate the car benefit? 48,000 into 15% minus 115 to 4. Okay, good. I got one answer. The others? How can we calculate the taxable car benefit? Yes, good. I got one answer from Nafis. Good. The others? Eshma, Abdullah, Megan, Muaz. How about your answers? By any chance, if I'm pronouncing your names incorrectly, please let me know. $48,000 into 15% minus 150 into 4. Okay, I got Abdullah's answer as well, which is in line with Nafis's answer. Guys, again, this 15% is an annual rate, isn't it? So if I just take 48,000 into 15% minus 150 into 4, will that be accurate? Was this car given for the entire year? Was this given throughout the tax year? No, right? It's given only on December. So the benefit was there only for 4 months. So 48,000 into 15% divided by 12 into 4 minus 150 into 4. Wouldn't that be the correct answer? 48,000 into 15% divided by 12 into 4 minus 150 into 4. Wouldn't that be more accurate? Don't you think we need to time a portion on this 15%? Okay, I got one answer from Muaz. The others, what are your thoughts? Right. So again, you guys got deceived, right? It should be 48 into 15 divided by 12 into 4, then minus 150 into 4. Are we clear? Right. So these are the small, tiny points that we have to be careful in the exam if we are to score the full marks. These are the things that you might commit in the exam as well. Coming back. Until they provide Ben with a car, they have given a mileage allowance of 60 pennies per mile. And the mileage is 9,000. What about that? What are they trying to capture here? What benefit are they trying to capture here? Yes, it's about mileage allowance. Good. So how are we going to calculate the mileage allowance in this scenario? How would we calculate that mileage allowance? Point 0.6 into 9,000 minus 0.4 into 9,000. Okay. 9,000 into 0.55. Okay, good. I got two answers. The others, what are your views? Come on, let's be interactive. Let's share your answers. Eshma, Abdullah, Megan, how about you guys? 6.6 into 9 minus 0.45 into 9. Great. So I agree. So there are two methods to do this calculation. Correct, Moaz. Yes, I figured it out. So there are two methods to calculate the value in this kind of a question. Number one, 0.6 into 9,000 minus 0.45 into 9,000. Or you can simply get the gap between 0.6 and 0.45 and multiply by 9,000. Either way, you would get the same answer. Are you okay with the mileage allowance in this particular question? Any doubts on the mileage allowance? All right, awesome. Last one on this question. The company has also provided Ben with a mobile phone at a cost of £270. How about that? Employer has given mobile phone. Yes, it would be an exempted benefit. So we just have to have a line and give a zero value. Are we okay? Right. So let's see how would this looks like in an Excel. Let me open the Excel. So I have two questions. I'll answer one by one. So one for Nafi, your comment. Don't worry, your exam is not going to be full of these kind of small, tiny adjustments. This is a revision, so I have to make it as much as tougher so that we are familiar with the devil. When we know the devil, we can easily deal with the angel. So nothing to worry about that. Just we need to practice more and more questions. I just wanted to emphasize on that. That's why I came up with a tricky question like this. So that we know that we don't know anything. That means we have to practice more, right? No problem, Nafis. So, Muaz, for your question, yes, if you practice tough questions, then exam might be look like an angel. Because exam is not as tough as you expect if you are prepared for that. Exam would be tough only if you are not prepared. So let's do more and more questions wherever possible. Try the revision kit. Study Hub, you have a massive amount of questions, especially focusing on section A and B. Try that because honestly, we observed a recent trend, not much in tax, but in certain papers like PM that can be flown to tax easily in your exam. Because the Study Hub questions available in your portal is only applicable for the current exam. After that, the rates are going to change. So Study Hub, they will have to change. So there can be similar questions that are appearing in the exam for you all as well. Yes, Muaz is agreeing with my comment. PM, it was clearly evident that Study Hub questions are repeating in the exam. So Same thing can happen to your tax exam also, given the point that I have just shared. Because these questions are valid only for your exam. After that, we will have to change all our materials. So you guys are using the Premiere Plus now, and I have started recording the Premiere Plus for the next batch today itself. Because everything is going to change. Not all, but there are some material changes for the tax rates and all for the next batch. So we can expect the same pattern in your exam, hopefully. So try the study hub, take it seriously. Take the study hub seriously. Try the questions in the study hub. Are we good? Great. And an answer to the original question that Muaz raised, if we haven't have a line and put the zero value, are we going to lose any marks? Yes. Because the reason is, assume yourself as the examiner and I am the candidate. I submit an answer and I don't have any mention about this mobile phone. As the examiner, how can you assure that I knew it is exempted, that's why I didn't take it, or I missed the adjustment itself? As the examiner, how can you assure that? If I haven't given a zero value or any comment. Exactly. Therefore, it's always advisable, and in certain cases, exam paper itself states that if no adjustment is required, have a line and give a zero value so that the examiner is aware, since no adjustment is required, you didn't do any adjustment, not that you missed the adjustment. Are we good? Great. Now let's see an Excel, how we can put these answers that we have just discussed into an Excel. Guys, in your exam, this presentation, how you present the answer, is equally important like your theoretical knowledge. So when you are calculating, make sure that you provide everything in a structured answer. So in my case, I'm calculating for Ben, I'm computing the employment income. So Ben, computation of employment income. Salary, I took 70,000. Living accommodation benefit, I gave a working. And I clearly gave the working reference number, W1. So if the if the examiner wants, he can go back and figure out the working. So basic charge, I got 3,400. Expensive accommodation, even though there is nothing, I'm going to do the calculation and prove expensive accommodation is not required. Cost 60,000, improvements 10,000. Cost of providing accommodation is only 70,000. So the expensive accommodation would be zero. Private fuel benefit. Have they mentioned anything about that in the question? They are not mentioning anything about the private fuel, right? Megan, is the question referring to anything about that? Right. So if the question doesn't require, we don't need to go for that. Because private fuel, we don't know, right? Whether the company is providing that or he is incurring on his own, we don't know. If the full amount is incurred by on his own, then there is no benefit for him to be taxed. Since we don't know about that, let's not include that. Megan, are we good? Awesome. So I have shown that expensive accommodation is zero. Then furniture, 7,000 into 20%. I just took that. I added two together and took as living accommodation. And I linked it here. I didn't copy paste it. I linked it. Why do I link it here? I could have simply copy paste, right? Why am I linking? So link means press equal, click on the cell that you need to link, press enter. This is what happened when you link. Why did I link instead of copy pasting? Or if you want, you can give it separately as well. No problem in that. So, answer for your question, Megan, there is no harm if you presented furniture separately and the living accommodation separately. No problem in that. Right. Coming back, why do we need to link? The reason is if you link it, whatever the changes that you do at the original source will automatically get adjusted in the answer. For an example, if I make my basic charge 0, automatically my living accommodation benefit will become 1,400. That is only the furniture. If I did not link that, I have to copy paste it again, which I might not do. I might forget to do in 99.99% of the time with the exam pressure. So make sure always you try to link the question answers when you are coming from the workings, just to ensure if you make a change that is automatically reflected in your final number. Are we good up to now? Any questions? Awesome. Then the next one, car benefit. I have given another working for that, and I have given the working reference clearly, W2. So if the examiner wants to check the working, definitely he will. He will go to working number 2 and go through the working. Cost is 45,000. Additional features 8,000. Contribution by Ben limited to 5,000. So the list price would be 48,000. The cost, additional features, and contribution made by Ben. Is that what you are referring to, Moaz? The living accommodation. You mean without doing this part, if you just take 3,500 and this furniture benefit in one cell, something like this. Is this what you're asking for? I advise to have this breakup. The reason is, like I said at the beginning, when it comes to, if it is a section A or B question, please go ahead. Have the workings in your calculator, even no problem. But if it is a section C question, better to do on step by step, better to show each step, because marks might be allocated for the steps. For an example, if you took this 4,800 at a stretch, you might have lost one full mark, because 0.5 is given to disclose there is no expensive charge. 0.5 is given to separately disclose the furniture value. If these two are not there, you might have lost one mark. Even though this 4,800 is there, you might lose, because then it is purely up to the examiner to decide whether he's going to award this one or not. If he's in a good mood, yes, he will award that. But if he had a fight with his wife while coming to mark your paper, then you are done. Are we okay? Right. So don't give a chance to your examiner's mood. Let's make sure we give all the steps. Great. Then coming back, I took the total benefit, which is 7,200. Then I took out the 8 months period for which the benefit was not given. 7,200 divided by 12 into 8, which comes to 2,400. From that, I am deducted what Ben has paid. That is 150 into 4, 600. So the taxable car benefit will come for 1,800. Are we good on the car benefit part? Awesome. Then I have linked that here. Mileage allowance, of course, it's a straightforward one. Therefore, you can do on a cell. It's a very straightforward one. If you had two steps, that means Let's say the mileage was 15,000 miles. Then you will have to give a working. Yes. After the class, I will share the working with you all. Don't worry. Mileage allowance, since we have only one limit, we are not going beyond the 10,000 limit. So we can straight away do the calculation in the Excel. No problem in that. But if by any chance, if it was 15,000 miles, then you have to give a working because we are crossing the limit. So we have to show step by step in that case. Right. Then mobile phone, it's exempted. So I made it 0. So the employment income would be 77,950. Any doubts or questions around how to calculate employment income in this particular question? Anything that you all are not clear? Okay, Moas is okay. The others, how about you guys? Great. So how was this question? So what's your feeling about the question? Annoying, okay? Tough, useful. Right. So I would say not all these adjustments would be there in your exam, but one or two these kind of tricky adjustments might be there in your exam. So we have to be prepared for this tricky part in your exam as well. Are we good? Can we move on to the next question? Awesome. The next requirement is calculate the trading income for Ben. Only 3 marks. Can you guys take 5 minutes and try to calculate the business income or the trading income for Ben? Can you give a try? Awesome. I'll give you guys 5 minutes. Give a try to calculate the trading income for Ben. Guys, how's the situation? Do you guys able to complete the answer? Guys, who has completed, can you guys share your answers with me, please? Okay, got Abdullah's one. Good. The others? Okay, got Muas's answer as well. Ishma, Megan, Nafis, Hamna, how about you guys? Okay, great. Got Nafisa's answer as well. All right, let's start discussing. Then started trading on 6th September 2022 and had a profit before tax of £47,000. When deriving the above profit, a depreciation of £10,000 were found to be deducted. During the year, Ben has purchased a small property to carry out his business at a cost of, this should be 230,000. Sorry, it's my bad. Great. Thanks for your answer as well, Megan. Guys, here it's a typo error. Sorry about that. It's 230,000, not 23,000. Where the cost of the land was £120,000. Ben has used inventory of his business, which had a cost of £5,000 for his personal use. This inventory had a sales price of 6,000 and a replacement cost of 5,500. No entries were in accounts with regard to this. Okay, fine. Based on these information, we have to calculate the trading income. What is our starting point? From where should we start? Awesome. We can start from profit before tax, which is £47,000. Good. Then they have deducted £10,000 depreciation when they were calculating this 47,000. What should we do? Great. Depreciation is not an allowable expense for tax purpose. So we need to add it back. Good. So 10,000 we need to add back. And he has purchased a small property for his business purpose at a cost of 230,000. And the land value out of that is 120,000. So what can we do with this cost? First of all, what is meant by a property? What is meant by a property, guys? To start with, something he owned, okay? Any different views? What is the meaning of a property for accounting or tax purpose? Not in English. In accounting or tax purpose, what would be the meaning of a property? Yes, it would be a land and a building. Yes, it's a non-current asset, true, but it will be a land and a building. So he has purchased a land and a building for £230,000. Out of that, the land value is 120,000. What should we do with this 230,000 and 120,000? Why these values are given? What do you think? What kind of an adjustment can we make with this? To find the value of building, capital allowances, to exclude the land, no adjustments. For capital allowances, disallowed, okay. All right, guys, it's a capital asset, I agree. But for business-related capital assets, we are granting something called capital allowances. Can you guys recall something called capital allowances? Great. So we need to grant capital allowances for this property. So can we grant capital allowances for the entire 230,000? I got one answer as no. Yes, we cannot give for the land. For land, we are not granting any kind of a capital allowance. So the total property value is 230,000. Out of that, we know the market value of the land, which is 120,000. I can deduct that. On the balance, I can grant capital allowances. So what is the capital allowance that we can grant here? I got one answer as AIA, the others. Another answer as AIA. Any different view? Quickly go back to the handout on capital allowances and see what can we grant here. Everyone, quickly go back to your notes and check what would be the capital allowance that we can grant here. I got one answer as SBA. Okay, three answers as SBA. Great. For buildings, AIA is not applicable. It's N/A, not applicable. But we can grant structures and buildings allowance. How much is the percentage of SBA? Great. It would be 3%. Good. So on the building value, we can grant 3% SBA. Good. Yes, 3% per annum. Great. Next one. He has used inventory of his business, which had a cost of 5,000. Sales price is 6,000. Replacement cost is 5,500. And no entries were passed in the books. So what should we do? We have the cost 5,000. We have the sales price 6,000. We have the replacement cost 5,500. No entries are done in accounting. So what should we do now? I got one answer as sales. Add back the sales price. Take the sales price. The others, what are your thoughts? Ishma, Megan, Muaz. Okay, Muaz also shared. Add 1K to profit, okay? Hamna, how about you? Ishma and Hamna, how about your views? Sales price. Great, I agree. Any inventory taken out by the owner should be treated as a sale. But how to do it as a sale depends on what we have done in accounting. If we have accounted it as a sale, no adjustment. If we have only accounted the cost, we need to add back the profit margin. In this case, 1,000. If we haven't done any adjustment at all, we have to add back the full sales price, which is 6,000 pounds. So we need to add back 6,000 pounds to our accounting profit. Are we clear? Awesome. Let's see how we can put this into an Excel. As usual, I am going to mention for whom I am calculating and what I am calculating. When computation of trading income. I have started from profit before tax, 47,000. Depreciation, I added back. SBA, I just calculated here itself because it's a straightforward one. So the property was purchased in when? He has started the trading on 6th September. That means, was this sale going on throughout the year? The trading income, was it throughout the year? Great. It hasn't been therefore throughout the year. So SBA, we have to time apportion therefore. So it has started on September. So October, November, December, Jan, Feb, March, April, 7 months. So we have to time apportion for 7 months. So what I have done, I have took 230,000, the overall property value, minus 120,000, which is the building value, into 3% divided by 12 into 7. So I have time apportioned the SBA. Are we good? Great. Finally, the inventory is taken for personal usage and not adjusted in accounting. I added back the full sales price. So my tax adjusted trading income comes to 61,075 pounds. Are we good? Any questions on trading income? Anything that you all are not clear on trading income? Awesome. Then let's move on to the next question. They are asking us to calculate the property income for Ben. 9:30 would be the maximum. So it will be 9:30 or a little bit earlier. Are we good? Right. So they are asking us to calculate the property income as well. This is for 2 marks. So again, can we take around 4 minutes and give it a try? Would you mind giving it a try? Awesome. Take 4 minutes and give it a try and share the answers with me. Then we will start discussing the property income. All right, guys, how's the situation? I got only one answer so far. The others, what are your situation? Only Nafis has shared the answer with me. Ishma, Abdullah, Megan, Hamna, how about you guys? $57,000 from Abdullah as well. Okay. Almost done. All right. Megan, Hamna, how about you? Okay, received the answer from Megan also. All right, let's start discussing. Ben has rented out his house since July 2022 for a monthly rent of £8,000 received in arrears. Rent for the month of March was only collected on 17th April 2023. During the year, he had to replace the existing cooker with a new cooker which had a better features at a cost of £13,000. A cooker with the same features could have been purchased at a market price of 7,000. Okay. First of all, what is meant by rent received in arrears? What do we mean by received in arrears? Great. Ishma, I got your answer as well. Good. Yes, received in arrears means rent will be collected at the latter part of the month, at the end of the month. If that is the case, for how many months we could have collected rent based on the information given in the question? Per month, it's 8,000. For how many months we would have collected based on the information given from these two sentences? 8 months. Okay, I got one answer as 8 months. The others, okay, 2 answers as 8 months. Okay, 3 answers at 8. Okay, everyone goes for 8. So July, August, September, October, November, December, Jan, Feb. Yes, 8 months, because March 1 is collected on 17th of April. That means that we haven't collected during the year. And for property income, unless otherwise mentioned in the question specifically, the default method we are going to use is cash basis. So if we are using the cash basis here, what will happen? It will be only 8 months. So 8,000 into 8 months would be the rent received. Are we good with the rent received part? The income part, are we good? Great. Then the next one. There was a replacement of a cooker with something which has better features. The cost is 13,000 and we could have replaced something with similar features for £7,000. So do we have any adjustment coming in here? Any adjustment required here? Okay, I got one answer as up to replacement cost, one as yes, the other one as none. Right. So here the point under consideration would be domestic item replacement relief. That would be the point under discussion here. So what are we going to do with domestic item replacement relief? So domestic item replacement relief means if we replace an existing asset in a rented out property with an asset with same features, the cost of the new asset can be deducted. But what if we, replace with an asset which has better features? That is what happened here. then there is no relief at all, is it? No. Still, if we know the market value of a similar cooker or a similar asset, that can be allowed to be deducted. So in this case, we know that 7,000 is the market price of a cooker with similar features. So up to 7,000, we can claim the domestic item replacement relief. Are we clear? Is that good? Awesome. Then let's see how we are going to put this into an Excel. Again, I am going to give the data for whom I am computing and what I am computing. Then computation of property income. Rent received 8,000 into 8. Domestic item replacement relief 7,000. So the property income would be 57,000 pounds. Are we good? Any doubts up to now? All right, great. Then I'm moving on to the next part of the question. Calculate the income tax liability for Ben. You have been awarded with 3 marks. I'll give you guys 5 minutes. Can you try to calculate the income tax liability? Great. Nafis has already tried it. The others, if I give you 5 minutes, can you guys give a try to calculate the income tax liability? Great. So time starts now. 5 minutes. Try to calculate the income tax liability for Ben and share the answer with me on the chat. Guys, how's the situ? I received answer only from Nafis. The others, how's the situation? Can I get your answers? Ishma, Abdullah, Megan. How about you guys? Can I have your answers? Okay, Ishma is doing it. Abdullah, Megan, how about you guys? 2 minutes. Okay, I'll give you 2 more minutes. Try to complete it then. Max 2 minutes, guys. All right, guys, that 2 minutes is also over. How's the situ now? Shall we proceed? All right. So again, I'm going to mention what am I going to calculate and for whom. So I'm going to calculate for Ben and I'm going to calculate the income tax. Employment income, I linked from the top. I already calculated that. Trading income also I calculated, so I linked that. Property income also I calculated, I linked. So I derive at my total income, which is 196,025. So I cannot grant any personal allowance. Okay, let me show the property income once more. This is how the property income has been done. Rent receipt 64,000, 8,000 into 8. Then domestic item replacement relief only up to a 1-to-1 replacement, which was 7,000. So the property income would be 57,000. Megan, are we good? Great. So it is far above the limit of 125,140 relating to proper, what you call, personal allowance. But I have a line and show that I'm not charging any personal allowance at all. PA 0. The taxable income would be therefore 196,025 pounds. He's an individual, so simply he don't have any other income like savings income or dividend income. He doesn't have. Only non-savings income is there. So use the, what you call, tax rates applicable for non-savings income. First 37,700 at 20%. Next 112,300 at 40%. And the excess 46,025 at 45%. So the overall income tax liability would be 73,171. Are we okay? Any questions on income tax computation for Ben? Awesome. The last part of this question, that is the most interesting part. If Ben made a gifted donation of £50,000 on 2nd April 2023, what will be the impact on his income tax liability? Can you guys give it a try? What if Ben made a gifted donation during the tax year? What would be the impact? Awesome. Nafis has already given a try. The others, take 4 minutes, give it a try. Eshma, Abdullah, Megan, can you guys give it a try? Awesome. I'll give you guys 4 minutes, give it a try, then share the answer with me and we'll start discussing. All right, guys, time is up. How's the situ? Awesome. I got 3 answers. Good. So what kind of an impact a donation, a gifted donation will result actually? What will happen through a gifted donation? What kind of an impact would be there? I'm not asking about the number. What are the aspects that might get impacted through a gifted donation? What do you guys think? I would say mainly tax rate bands might get impacted. Those might be extended by the gross gifted donation. Sometimes, if the donation is material, sometimes even the personal allowance might get affected. So let's see where we will end up in this particular calculation. So first of all, I have to see what is my adjusted net income. 196,225 would be my net income. Donation net one is 50,000. I have crossed it up. Divided by 80 multiplied by 100. So that gives me a net donation, gross donation of 62,500. Once I deduct that, I will be ended up with the adjusted net income of 133,525. The limit is only 100,000 and the excess is 33,525. So no personal allowance can be granted still. Even as a result of the donation, there is no personal allowance that we can grant. So my taxable income will not change as a result. But now my tax rate bands will be extended. 37,700 will be extended by 62,500. And 150,000 will be extended by 52,500 as well. So as a result, now I am not going to be an additional rate taxpayer anymore. Under basic rate, I will have a tax liability of 20,040 pounds. Under the higher rate, I will have a tax liability of 38,330. Overall liability would be 58,370. The tax savings, therefore, would be 14,801. Are we okay? Any doubts on how I derived at the tax savings from the donation? Any doubts? Nafiz is okay. The others, Eshma, Abdullah, Megan, how about you guys? All right. Okay, so the time is almost up. So we will stop at this point for today. Next class, we will look at on capital allowances and corporation tax. We'll have a quick recap on that and few calculations among capital allowances and the corporation tax as well. Are we okay with that? Awesome. So let's stop at this point for today. Thank you very much for your participation. Let's catch up on the next class. And meantime, if there are any queries, any clarifications you require, please feel free to get in touch with me. So good night, guys. Take care. We'll catch up on the next week.